I'm Charlotte McLeod with investingnews.com, and here today with me is Will Rhind, CEO of GraniteShares. Thank you so much for being here. Great to have you.
Charlotte, thank you so much for having me back on. Great to see you.
Of course, really good to be catching up. It has been a while since we last spoke, and as I was getting ready for this interview, I was looking back to our last conversation, which I believe was in September. And the thought that you kind of left us with at that time was that the market was probably going to do a little bit better than people thought that it would, which definitely I think that has panned out. It does feel right now like people are getting a little bit concerned as they see the Magnificent Seven really driving the market. So I wondered if we could start by getting your thoughts on what's going on there.
Absolutely. So I think, as we discussed last time, that I think that the conditions were primed for the market to continue to rally or continue to grow. And that is indeed what's happened. And I think really the story of this year has kind of continued a little bit in terms of last year. Magnificent Seven stocks, large tech companies outperforming. But I think what we're starting to see is a little bit more of a broadening out of that rally beyond just those large tech stocks. Earnings more broadly, Charlotte, have been pretty decent across the board. So not just tech companies, but really companies from all sectors. So that's really been the story, and obviously the primary reason that helped, drive the major market indices, at least in the US, to all-time highs.
And do you see that continuing into 2024? Is that going to continue to be the story?
I think so. Again, at this point, I don't see really any reason to be bearish, or at least any catalyst coming sort of in the immediate future that would derail things. I think the Federal Reserve, cutting interest rates, again, the market has priced in a certain number of cuts for this year. But I think even if that doesn't come to pass, we're still in an environment where your earnings have been really strong regardless. I don't think even that is enough to really derail things. I think it would have to be something like a very nasty shock on the inflation front, or some geopolitical concern regarding the two wars that are happening in the world at the moment. Something of that nature, I think, to spook people a little bit more.
Right. And definitely we want to check in on what's going on with the Fed in 2024. So you mentioned the market is priced in a certain number of rate cuts. We're kind of waiting to see when that turnaround will happen. Meanwhile, the Fed is telling us they want to see really clear evidence that inflation is trending back toward their 2% target before they make a move. So maybe we take a look at your outlook for inflation this coming year.
I think I'm not sure I'm necessarily away from consensus on inflation. I think there's no doubt that inflation's coming down. I'm not sure that inflation's going to 2% this year. It wouldn't be in that camp, or certainly in 2% or below camp. But, I think that inflation numbers, persistently or consistently have been coming down. And so a 3% type number seems reasonable in terms of where inflation ends up this year.
And what are you watching when you kind of look toward where inflation is going? What are the factors that you look at? And is there anything that could derail that forecast for you?
Again, I look at the, clearly the CPI, a number of those inputs in terms of that go into the major inflation indices and inflation measures that the Fed likes to look at. I think that really the only thing that not the only thing. Of course, there can be a number of different things that can derail inflation expectations. But, again, what we talk about on this show, commodity prices, is clearly one which, have been largely subdued in the last 12 months or so, but starting to tick back up again, as economic conditions have improved. So, rising commodity prices is something that plays directly into inflation. That could be a negative surprise in terms of the numbers later on this year. Some, a hotter than expected number from China. Again, that's been so negative, but perhaps we're getting closer to the end in China, and therefore a positive surprise from the Chinese market is overdue. So something to that effect could also help on the inflation side. But really, I think at the moment, the core numbers in terms of, housing, I think that's coming down. Financial conditions obviously continue to be tight. So probably you're looking at commodity prices, and or some positive surprise from, a market like China.
Okay, really good to go into that. And, we talked about how the market is expecting a certain number of cuts from the Fed in 2024. Are you in line with the market consensus there, or what are you expecting from the Fed this coming year?
Yeah, I think so. But again, I'm not one of the people who's sort of overly fixated on that. In other words, if there's one or two cuts less than the market expects, I don't think that is going to cause a major problem. So I think in an election year, we can talk about that. One would expect there to be some easing of conditions going into the election towards the end of this year. So again, for me, I think there will be cuts. I'm in line with market expectations on that front. But again, I think the economy is showing enough resiliency that I don't think it's going to matter too much if we come in more or less than expectations.
Right. And you mentioned we're in an election year. I've been waiting to talk about the election. I was telling myself for a while it's too early to go into this, but now we're firmly in 2024. So, any other considerations that investors should watch considering that we are in this type of year?
I just think, again, if you look back in history, that, again, probability wise, election year is typically a good year for the market, and typically the year following an election is also a good year. Again, we're talking regardless of who gets elected, whether it's a Republican or a Democrat. So I think you're looking at some of the signaling, at least in the market, and in an election year, I would expect there to be some easing of financial conditions for obvious reasons. But I think the effects of that also play out into the following year. At least we can look back at history and say that probability-wise, it tends to be, a good setup.
All right. And, as we're talking about the Fed, the other question I wanted to ask you about is the balance sheet. So, based on the last meeting minutes, the officials seem pretty keen to discuss that in a little bit more detail in upcoming meetings. So, anything you could add there that we should be paying attention to?
I don't think that there's really probably anything that, would be, that sort of earth-shattering to add to that. Other than clearly it's a concern not just for the Fed, but for the federal government, for any government, frankly, in the world that is carrying huge debt balances, and that is something, whether you're talking about the deficit here, whether you're talking about official government debt, that these debt piles are a big concern to a lot of people, and will need to be addressed.
So, our audience is, of course, watching the Fed quickly because this has an impact on the gold price. But I want to ask you other gold price factors that you're going to be watching in this year coming. I know we've talked previously about the importance of the US dollar. You mentioned there's all these geopolitical things going on. Central bank buying is another topic that we've touched on previously. So, what are you paying most attention to when it comes to gold?
I think really the key factor is still going to be around the dollar and that sort of easing of or softening of the dollar vis-a-vis inflation expectations and interest rate expectations coming down. But what has made gold so resilient so far is not just the dollar, is the geopolitical tensions, the stresses around the conflicts that we've got going on in Ukraine and in Gaza. And so these factors, along with, the demand picture that has continued to be so bright, from the central banking sector, continues to put a bid on gold.
I know we don't usually do price predictions, but broadly, if we look at the upcoming year, how do you see the gold price moving?
I think gold is, well, first of all, gold has been resilient. And again, in the face of high interest rates, really in an environment that almost goes against what you would think behavioral wise the gold price would do. I think that it sets up nicely for an environment where, to me, these three key factors, move in gold's favor. In other words, the dollar, gets weaker, in the election year, particularly the year after. I think inflation starts to come down, helping interest rates to come down, which eases obviously the real cost of gold, the holding cost of gold. And then lastly, the geopolitical tensions don't seem like they're really willing to go away quickly, and therefore will, I think, keep some tension in the market, and again, some interest in gold as a defensive asset. And then lastly, I think we have to say that the amount of cash that's sitting on the sidelines, one of the key, I think, considerations for investors has been, this environment where if you can get 5% on your money at the Fed or even in a CD from a local bank, if that starts to come down, then again, the attractiveness of something like gold increases. And I think we start to see some rotation, out of these cash assets into things like gold.
I think that kind of starts to touch on another topic that I wanted to bring up with you, because we do have, as you mentioned, gold historically high. It's maintaining at these levels. I know a lot of our audience still owns gold stocks, and they're looking at their gold stocks and wondering, okay, when are they going to pick up? When are we going to see them respond to the higher gold price? So I wanted to check in with you and see if that's a disconnect that you've been seeing and what you think might be behind that.
Yeah, unfortunately, it's a little bit like history repeating itself with regards to the gold stocks. And, again, we go back to the last cycle, and typically what happens, and it's no different in my mind this time around, albeit, everything has its own nuances. But fundamentally, this is about the inflation that companies are experiencing in terms of costs, whether it be energy costs, whether it be financing costs, but inflation moving up faster or at a speed whereby you can't take advantage of the gold price gains in terms of production. So it's almost like we saw in the last cycle, particularly in the kind of early 2000s, where any gain from the gold price was eroded by inflationary cost pressures. So I think this time around, it's a very similar story. And so until those kind of start to subside for the mining companies, it's difficult to see how companies are going to do materially better in this environment.
Very okay. Thank you for going into that. It's a tricky situation, I think, especially for people who are watching that happen. So we've gone over what's going on in gold pretty well, I think, but I also want to check in on platinum. So you've been bullish on platinum for quite some time. And it's really interesting because the market is in deficit, but the price seems really range bound. And we've even seen, I think this past week, Anglo American cutting its workforce because of the low platinum prices. So I want to check in on what you see going forward in 2024, if you think that the market dynamics are going to be reflected in the price anytime soon.
Well, it's a good question. I'd like to say the answer to that would be yes, but have been a bit disappointed by what's happened in platinum. And again, on what is, from a fundamental perspective, a very attractive environment for any investor, looking at a fundamental picture where the market's in deficit and you have more demand than you have supply, but the price just hasn't seemed to react or respond in that way. I think a big part of that is China, and the consumption that coming out of China has not been there, given their economic problems. I think again the auto market, despite I think still overall strength, it has to be said that there are signs of weakness in the auto market. Manufacturers looking to cut back costs, etc. So it hasn't been all sort of roses outside of just the basic supply and demand picture for platinum. And I think it's something that I'm cautiously optimistic on. I hope that the price can recover in this environment, but it has been a bit challenging.
Would you put silver kind of in that same basket, because it's another one where we have these large deficit projections and the price kind of stuck there?
Exactly. Very, very similar kind of story, albeit again, the nuances are always different, but it's a market that I think if you look at the precious metals complex, it's really gold has been the standout. Has been the star of the show. And I think the sort of economic woes, maybe more narrative based, and that's what gives some positives to the bulls in terms of the platinum and silver markets. But I think largely those sort of negative narratives perhaps have, taken more precedent over the more fundamental picture.
I think I definitely see that happening. So, on a brighter note, we're still relatively close to the beginning of 2024. So, I was going to ask you where you see the most opportunity. It can be in commodities, but I know you have a much more broader outlook and set of things that you look at. So, most opportunity this coming year.
The to me the biggest thing, and again it's just the zeitgeist that we're in at the moment, is AI, and of course within that, the companies that benefit most from AI. So Nvidia rising to be now one of the largest stocks in the U.S. market, eclipsing Google, eclipsing Amazon in terms of market cap. And that's been an incredible story, and I think that will endure. AI is, I think, the seminal theme, not just of last year or not just this year, but I think of years to come. So the technology market, has prospered in this environment for good reason. But I think outside of that, go back to gold and, really from a commodity perspective, I know oil has, caught a bid over the last few weeks, but I think in this environment, this is one where the gold price has been very resilient, but yet, although we're sort of hovering around those all-time highs, it seems to me like the fundamentals for gold are still positive this year. And we talked about, the dollar, we talked about inflation, talked about the interest rates, and of course the geopolitical situation, and the central bank buying. So gold to me still stands out as being that precious metal that will still get the most traction, will get the most attention, and probably perform the best this year.
That's very interesting, especially, for me here, we're very focused on the resource and mining sector. And one of the things that we hear is when we have new trends like AI popping up, people are always talking about, well, it's going to take attention away from gold. But it sounds like, for you, they can coexist. Perhaps these things can both thrive at once in their own way.
Oh, absolutely. I mean, look, as we've talked about with gold, for thousands of years, that there have always been and there always will be new technologies that are developed, and those technologies will sometimes compete with gold and sometimes compete with other commodities, and other times will happily coexist. But ultimately, gold is still gold. Gold is not going anywhere, and the emergence of AI or these other things is not going to replace or gold or provide anything. I think if anything, is gold has shown its enduring value and will continue to do so.
All right. I think that's a nice balanced note to leave people with. So thank you so much for coming on to talk about what's going on in the markets. I'm sure we'll check in later this year and see how things have panned out.
Thank you, Charlotte. Great to see you as always. Thank you for having me back on.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Will Rhind of GraniteShares. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.